All right. So let's first start with the introductions. So this is Adam Umar, and I am a chartered accountant, and I did ACCA and then I did ICAEW, and I have been teaching in UK from like past 7, 8 years. I I've been teaching to the students of ACCA at you know the University of London students, right? And what else? I have a dog, and I am a bit of a sneakerhead. Okay. All right. So, the purpose of having this practice and revision session is I was, just when I was going through the group, I just realized that many of the students are concerned about this INAC exam. So I am, just trying to conduct these free lessons and, just trying to do this revision session as well with a very nominal fee. Um, to help the students to if I would be able to somehow help them in any way. So, that's why I just, I started with INAC, right? So for this, um, for this course, what we are going to do is we are trying to quickly cover all the topics in your curriculum, and we would try to get to the practice mode as quickly as possible. Um, when we are done with a couple of chapters, we would be in a position to do um, the practice questions, right? I have designed these notes, and we are going to go through these notes for our revision. I'm going to send it to you after the lesson so you can use the notes for your revision. There is a little bit of practice questions in these notes as well. And during the lesson, if you guys have any question, you can ask me, right? You can actually you can raise the hand, or probably you can ask the question in chat. Probably, I think you have the option to unmute yourself as well. Yeah. Let me see. Good evening, Hannah. Good evening. Hello, mentors. Okay. All right. All right. So, don't hesitate. If there is any question, you can ask during the lesson, right? Because once our concepts are clear, so because, we are going to build upon the basics. So is there any question? You can just freely ask me, right? And you can actually, ask me later as well. Like you can connect with me on WhatsApp or Facebook group. So yeah, question is basically the key for knowledge. All right, so let's start. So our first chapter is the accounting function. We try to understand what accounting function is and why we are studying accounting. Why do we actually need accounting with any of the organization, right? So in this exam, the focus of the examiner is to on internal control systems. Examiner wants you guys to understand about the internal control systems of an organization. You understand the internal control system, then you have to develop the ability to identify the weaknesses in that internal control system. Okay, so you know the internal control system, you identify the weakness in the internal control system, and then you need to have the ability to tell the examiner what's going to be the implications of this weakness in the internal control system. All right. So we need to know internal control system. We need to identify the weakness. We need to point out what's going to be the implication of this weakness um, for the organization. Right. And then you have to recommend remedies. How can you get rid of that weakness in the internal control system, right? So the point is, first thing we need to understand is the internal control system. And internal control system, the studies of internal control system is part of the accountancy, right? So internal control system is the topic which is taking some of the stuff from the financial accounting, some of the stuff from the management accounting, some is taking from the taxation, right? So internal control system is basically a topic which takes information from all the accounting aspects, different aspects of accountancy, right? So we try to understand the accounting function, right? All right. So to understand the accounting function, the first thing we need to understand that what is an organization. Okay. So uh, organization is basically is the social arrangement in which people have collective goals, right? And this is a sort of setup arrangement in which you can have controlled performance. Okay, you have collective goals. This is a social arrangement in which you have collective goals and you are working for controlled performance. Okay, why we need to understand that? Why we actually need to understand the definition of an organization? So the organization is not just about a company which is working for profit. Okay? Any social arrangement where you have collective goals and you can have controlled performance, that would be known as an organization. Okay, so like if you have a club, right, that club is an organization. If you have a charity, that's an organization. If you have private limited company, public limited company, they are for sure organizations, right? We have any cooperative, right? Cooperative is a sort of social arrangement in which people come together. They are working for a collective goal in which you can have the controlled performance. So that's an organization as well. All of these organizations need internal control, right? That's why we need to understand the definition of an organization. Okay. All right. What is internal control system? Okay. We need to understand what is internal control system. So control system is, you need control system when you don't trust human beings. So when you are not trusting human beings, you need a control system. For example, when you lock your car, so you are locking your car because you think that someone is going to take your car away from you, right? So someone's going to steal your car. So here, because you don't believe in other humans, you need to have that control system. That lock in your car is an internal control. Okay. It's a control, okay? In the same way, so to prevent people from having from doing a fraud or an error in the organization, we have control system, okay? So anything which is preventing people from making errors or doing frauds, that's a control system. For example, when you walk in your office and you have that, thumb verification, that is because one, they just want authorized people to enter the premises of office. Second, they are noting down the time you entered in the office. Okay, so it is serving two purposes. So you have that thumb verification system as control. Okay, so that's a control. So anything you are doing to prevent fraud and error, that's a control. Okay, an organization can achieve an environment free from fraud and error by having stringent control environment or control system. Okay, so let's talk about the control mechanisms organization can use. Okay. So organizational structure. So you are dividing your organization in smaller bits, in smaller units. When you are dividing your organization in smaller units, it is easier to control the performance of that small unit. Okay, so you lay down the structure of the organization in a manner that the very structure of the organization is basically a control. So that organizational structure is preventing fraud or error. Okay, so organizational structure. Then we have target setting and budgeting. All right, so we have the budget at the start of the year, and we give that budget to um, mm, every department. Okay, let's say we have the sales budget, so we would be giving it to the sales department, and they know that, okay, so this is the amount of sales that I need to achieve during this time period, right? And then at the end of the period, you assess the performance of your sales team, comparing the actual numbers with the budget that you gave them initially, right? It's just that, let's say if I would give you if I give you guys a task that you are going to have a mock and you have to take at least 80% in that. So, even before starting the period, I'm giving you a budget, right? That's a target. And once you are done with your mocks and we see the results, so we can compare the actual results with the target, right? So target setting and budgeting is another way of having control in the environment. So you have the sales budget, then on the basis of that sales budget, you make the production budget. Okay, and then you make from the production budget, you can actually make the procurement budget, right? And then within the production, you can have the materials budget, labor budget. All right, so you can see that one budget is a source of communication between the whole organization. Okay, um, so on the basis of one document, you can assess the performance of the whole organization at the end of the period. Okay, so that's another control environment. Okay, so so target setting and budgeting. Okay, budgeting can be like anything. It can be a cost budget. Okay, let's say I am giving my material guy a cost budget and saying that you cannot spend more than this amount during the period. Okay, so at the end of the day, what I'm going to do is I'm going to compare the actual expense with my budgeted expense, and I see that what's the difference. Okay, so budget. So we use organization structure as a control mechanism. We also use budgeting as control mechanism. We use direct supervisions. Okay, this is easy, right? You have the manager and then you have the senior manager. So senior manager is supervising manager. So he's the senior manager is all the time just looking at the performance of the manager. So that's a very good control system. Okay. And we have organizational culture. Now this is very important. Organizations, what Japanese did, when the Japanese car manufacturers, what they did, they introduced a system which we call the total quality management, TQM. I don't know if you guys have heard about it. Total quality management, right? So total quality management was a system in which every department and every employee was responsible for taking care of the quality. Okay, so instead of having the quality checked at the end of the production, what they were doing, they were making everyone responsible for for quality management. And result was they were able to reduce their cost significantly. The efficiency increased like anything. So their lead time reduced, and you know, and then they were able to compete on the stage internationally with the American car manufacturers and German car manufacturers. Okay, so Toyota and Honda. This is what they did to actually uh, to bring efficiency in the organizations. So if you are working on maintaining the control culture in your organization, like if you have a very casual approach towards the regulations or procedures, right? If CEO is not following the procedures, or if directors are not following the procedures, the junior staff is not going to follow the procedures either, right? So, you are going to have questions in your exams in which you would come to know, the scenario would be that the purchase procedure is not followed um, completely. Okay, so if the purchasing procedure is not being followed, it means that it is a control weakness. Okay, it means you need to bring organizational culture more towards control. Okay, so you need to make the organizational culture in which control is given its due importance. Okay, so in one of the scenarios, they were saying that the purchasing manager was given a certain limit in which he can he can do the purchases, but he was not following that procedure, and that was because the organizational culture was lenient, right, when it comes to talk about the control procedures. Okay, so that's a weakness. So you can identify that this is the weakness. What can be the implication? Implication can be, if he is not following the procedures for purchasing, what he's going to do, he's going to make the purchases which are, which probably is not required to the organization. Okay? For example, if he has an arrangement with the supplier and he's getting commission on the purchases which the organization is making, so what he's going to do, he's going to inflate those purchases and he's going to increase um, his commission, right? So vested interests. He would be working for his vested interests and instead of working for the best of the organization. Okay, so that's a control weakness, that you are not following the procedures in your organization stringently. The implication is that there could be inflated purchases, fraud, misappropriation of misappropriation of assets, and then what remedy you can suggest for that? You can suggest that the company should be working towards uh, training of the employees for following the control procedures. Yeah. You can bring the trainings, or probably, if you suggest that you need supervision or segregation of duties or proper authorization. So that will be dependent upon the scenario. Okay. All right. So organizational culture is very important. And then we have okay, just give me a second. Okay, then we have organizational culture. We are done with that. Then we have self-control, encouraging employees to take responsibilities and work independently. Okay, so we are, again, you need to train your employees to take responsibility of the work they're doing. Like, I just gave you the example of the Japanese car manufacturer. So they were giving the responsibility on each individual worker that you are responsible for managing the quality of the product. Okay, at every step, you are actually giving them self-control. Okay. Okay. Then we have control systems. Okay. Like for example, budgets. So comparing actual reserve with the budgeted figures and identifying variances, right? And then we have specific control processes like reconciliation. Okay? So reconciliation is the process in which you try to reconcile information coming from two different sources. Okay? Like for example, you are maintaining your cash book at your office, okay? And the banker is making a bank statement. He's sitting in bank and he is making the bank statement. So at the end of the day, when you get the bank statement from the bank, there would be definitely some differences in the cash book and the bank and the bank statement, because there are some things which you don't know, like bank charges or direct debits or direct credits. You don't know about that stuff. You haven't booked it in your cash book. And there is some stuff which your banker doesn't know, like unpresented checks or uncredited checks, right? So this is the type of information that banker doesn't know. So what you do, you make adjustment in your bank statement and you try to come to the total of your cash book that you maintained. Once you get that tallied, it means there is no fraud or error in the whole system. Okay? But if they are not aligning with each other, if there is some difference, it means there is something fishy, right? And then we further investigate that. So bank reconciliation statement is one example. We have a purchase ledger control account, we have sales ledger control account. So we make the um, reconciliation statement for these control accounts as well. All right. So these are called specific control processes. Okay. Okay. All right. So what we try to understand so far, we try to understand what an organization is. Organization is a social arrangement in which people are working together towards collective goals where they can have controlled performance. So that's the definition of organization. Then we talked about different control mechanisms through which um, we can have the control environment in our organization. Okay, so the organizational structure, the very structure is used as control environment. Target setting and budgeting, direct supervision, organizational culture, self-control, control systems, and specific control processes. Okay. Now let's talk about control activities. What can you do to increase, what activities you can do um, to bring better control system in your organization? So we have supervision, all right? So supervision is like easy thing to understand. If like for example, in one of the scenarios in exam questions, one lady, she was responsible for making the payrolls of employees, and she was also responsible for making the reconciliation statement. Okay? She was reconciling the payroll um, with the actual numbers. Okay, so there was no supervision over there. So what she could do, she could add fictitious employees while making the payrolls, right? And she can misappropriate the assets. Okay, so supervision is like when you have a senior, right? And the senior is monitoring what you are doing. So, whenever you are making, probably she could make the payroll and she could make the reconciliation statements as well, had there been a supervisor monitoring her work. The better idea would be that two separate persons would be doing it. But even if she's doing it, if it's a small organization and they don't have a lot of employees, so she can does that, but she needs strict supervision, right? So supervision is one of the very important control activity. Then we have segregation of duties. Now this is a really effective control system. What you do is, the scenario that I just discussed, if one person was responsible for making the payrolls and the other person was responsible for making the reconciliation statements, reconciling the payrolls with the actual employees, so it would be known as segregation of duties. Two different persons are doing, you know, are performing two different duties, all right? So you are dividing the responsibilities among different individuals, so it reduces the risk of fraud, okay? Uh, okay, all right. Then we have physical controls. Like your storeroom should be locked, okay? So you have the inventory in your control room, so that should be locked. If you're not doing that, so anyone can walk into that storeroom and can steal the inventory. So this would be known as misappropriation of assets, okay? So if you are doing that, if your inventory is being stolen from storeroom because you don't have a physical control, so you are actually the assets figure in your balance sheet is not correct. You are understating the assets in your balance sheet. And you're also increasing the expense in your income statement of uh, statement of profit and loss. So these are going to be the impacts, the financial statement impacts of not having physical controls. And you're also going to have the, obviously, the as you are increasing the expense, you are lowering down the profitability of the company. So organization is going to have the financial implications for that as well. Okay, so this is physical controls. So you are locking the storeroom. This is physical control. Okay, um, no one, not everyone can have access to the finance department. Okay, or probably so, you need to have those physical controls. And we have authorization and approval, okay? So authorization is, like, for example, in one of the scenarios, um, the sales staff was given the right to give discounts till 10%. And anything above that should be authorized with the branch from the branch manager. Okay, so if sales staff is going to give discount more than 10%, that should be authorized by a senior person. Okay, so this is authorization. Authorization is very very effective control mechanism, control activity, like um, you know it is used in purchasing, it is used in sales, it is used in expenses, right? So everyone has a certain authority and they have the limits. Above that authority, they have to take the approval from the designated person. Okay, so this is authorization and approval. Then we have the arithmetical and accounting controls. So you are going to check the accuracy of the financial records through reconciliations, trial balances, and audit trials. Okay, so that's more like the basic financial accounting. You need to make, if you know that how to make the trial balance itself is part of the control system. You're making the trial balance to see whether all of your debits are equal to all of your credits. If they're not balancing, it means that there is some fraud or error. Okay, in the double entry bookkeeping system. Okay, reconciliations, like we already talked about, is part of the control system, and then we have the audit trials. Okay, then we have the personnel controls. So you ensure that your employees are well trained, right? They are competent and they are held accountable for their actions. Okay, so this is personnel. So these are the control activities that we need to do. I mean, in the purchasing system, in sales system, in cash management, in payroll. These are the activities that we are going to implement wherever required. Okay. All right. Okay. Okay. This is a question. So, which of the following statements about organizations and control mechanisms is true? What do you guys think was the right answer? You can give your answers in chat. Okay, B. Ooh. Yes, you're all right. B is the right answer. Okay, now, we studied that one of the control mechanism was the organizational structure. So how the organizational structure helps you um, strengthen the internal control system of an organization. So we are going to talk about a little more uh, uh, different types of organizational structures, right? So organizational structure, uh, different organizations have different types of structures. Uh, I assume that most of you already know about it. Like, we have organizations which are divided on geographical basis, right? So you have the country head, and country head is responsible for whatever is happening in that country, right? Like, Coke, if you take the example of Coke, so they have the heads of their regions. They have divided their organization in different regions. So the regional managers are responsible for whatever is happening in their regions. Okay. Um, there are some organizations which divide themselves on the basis of products. Okay. So one product has one department, the other product has other department. Okay. So that would be product based um, organizational structure. Then we have the functional based organization structure. So you are dividing your organization. Let's say your organization have presence in more than 100 countries, and you have that divisional structure on the basis of geographical presence, but you also have a structure which is taking care of the department. Like you have a finance head who is sitting in the headquarters. Okay? You have the marketing head who is responsible for the marketing of all regions, all areas. Okay, so this is the type of organization which we call the divisional structure. Okay, so you can have uh, organization structure on types of work. You have on the division of responsibility. Okay, and we have another type which we call matrix, in which you have the departmental structure like finance, HR, marketing, and then you have the regional division as well. Okay, region 1, region 2, region 3. Okay, so this is called matrix structure. It can be on the basis of regions, or it can be on the basis of products, right? So but the point is that this type of structure is known as matrix structure. Okay, so and then we have centralized structure and decentralized structure. Centralized structure is when you have the headquarter, right? And all the major decisions are taken at headquarters. Like if we take the example of Apple, so it's more like, the product is designed, the research is done at one point, okay? And then, the product is distributed across the world, okay? So that's more centralized structure. Decentralized structure, McDonald's is one of the examples of decentralized structure, like not a very good example, but yeah, they have, the regions have some level of autonomy, right? You would see that they have different menus, different branches, different cultures, right? So they have a certain level of autonomy on the basis of the region they are working in, okay? So centralized structure is when decision-making authority is retained at the upper levels of the organization hierarchy, and this can lead to day-to-day control issues and delays, okay? So if all the decision-making is done at the upper level of hierarchy, so the operational decisions would be delayed, and so that can be a problem. That's why sometimes we use the word, a term of diseconomies of scale. If your scale is too big, I mean, if it's too large, sometimes it's difficult to handle because you have communication problems, you have control problems, and as the hierarchy is increasing, you know about the Chinese whisper, so the communication is affected. So yeah, sometimes if you have a very centralized structure, in especially in big organizations, so that can have control issues, because the decisions are not taken at the operational level, and there can be erroneous decision making, right? Sometimes the higher management is not even informed of the issue properly. So yeah, decentralized structure is the type of structure in which authority is given to the lower levels, okay? Authority is passed on to the lower levels, okay? So this is more decentralized structure in which every region, every department, they have a certain level of autonomy to make their own decisions, okay? So both the structures have their pros and cons when it comes to talk about the internal control system. In a centralized structure, like we saw that there are communication issues, there are delays in decision making, there are sometimes ill-informed decisions. So that can cause problems for the organization. Um, in the same way, if you have a decentralized structure, it means you are giving authority to the low level staff, okay? And the low level management is making the decisions on their own, and the risk of fraud increases at that time, right? Because the managers are responsible for making their own decisions, they are responsible for some stuff, right? So yeah, so both centralized and decentralized have their pros and cons. When you are given a scenario, you just have to assess. Like for example, there could be a scenario in which the organization have a centralized structure, and because of what is happening, the information given to you in the scenario, their problem is highlighted because of that centralized structure. Okay, even the very structure of the organization is causing problem for that organization. Okay, so the point is that we need to just understand that there is a centralized structure and there is a decentralized structure. The rest we'll understand when we do the scenario. Okay, then we have scale change. So this is the line of authority within an organization. Okay, like for example, this is the CEO, and then you have directors, and you have managers, right? Then you have the lower managers, right? So This is basically scalar chain. This is the line of authority within an organization. A short scalar chain indicates fewer levels of management. Okay. Let's say if there is an organization who has a structure like this, a short span of control, right? Okay. So this is a short span of control. And that's long span. So when you have a shorter, what do you think, which one would be better for control environment? Okay. A shorter span of control is is actually indicating that CEO is not that far, okay, and a longer span would be showing that CEO is, there are many levels of management between me and the CEO of the company, okay. So tall structure and short structure, we have already talked about it. For the smaller organizations, they mostly have this, flat structure where you have fewer managerial levels and they have a wide span of control. I don't know if okay. So this is how your wide span of control looks like. I don't know if I used the wrong terminology before. Okay. And this is your tall span of control looks like. All right. Now we have another question. We have to tell whether each of them is true or false. Okay, again, you can leave your answers in chat. Okay. All right. Okay, let's talk about it. True, false, false, true. Okay, all right. So a decentralized organization typically allows lower level managers more decision-making authority. So this is true, yeah. Because a decentralized organization is the one, like I gave you the example of McDonald's, in which the regional managers, the managers who would be, the country head, he has more authority to make decisions, right? So a centralized is the one where all the decisions are taken at the center, at the headquarters, like Apple, okay? A decentralized organization is the one where decisions are taken by the lower level management. Okay. So yeah. So a decentralized organization typically allows lower level managers more decision-making authority. The answer is true. Okay. The second is in a centralized organization, decision making is generally faster than in a decentralized one. No, actually the problem with the centralized organization is, let's say, this is the headquarters, and then this is the managers, and then you have the branch managers, okay? And so if a decision has to be taken at this level, okay, a branch manager, let's say if you're talking about a retail store, okay, so the retail store has more than 100 branches, okay, more than 100 outlets, and one of the outlet is having problem with the electricity, for example, okay, or probably they want to just change their furniture, right? So this manager wants to make a decision. What he's going to do, he's going to request this level, then they are going to give, pass this request to this level, and probably the decision will be taken at this level, okay? So it's going to be time consuming, right? In other words, in contrast, if you have an organization like this, so if this guy is having a problem, he would just tell him, and the decision making would be much quicker, okay? So in a centralized organization, decision making is generally faster than in a decentralized organization. So this is false. Okay. And then a tall organization structure usually results in fewer opportunities for what is this? Promotion. Okay. All right. So a tall organization, because a tall organization has more tiers. Okay. You have CEO, then you have directors, then you have regional managers, you have area managers, then you have branch managers. So you have more tiers. Okay. It means if any of the person, now let's say, this is how the organization is looking like. Okay. So it has many levels. Okay. So let's say, this guy leaves the company. He has the opportunity to go over here. Okay. Probably he can go over here, right? So a tall organization has more opportunities for promotions. Let's say, if we have a flat organization, there is only one tier, okay? So if CEO would leave the company, then is the only possibility of, this guy going over here, right? So you're definitely going to have fewer opportunities in flat organization. Okay, a manager's span of control is always narrower in a decentralized organization than in a centralized one. Okay, so manager span of control narrower in a decentralized. So a decentralized organization is where the authority is given to the lower staff. Okay, so the span of control is always going to be broader in a decentralized organization. Okay, or you can say that span of control mostly varies based on the organizational design. Okay, so you cannot say that a centralized or decentralized has anything to do with okay, can you please mute yourself, Leslie? Thank you very much. Okay, so the manager's span of control has less to do with the centralized or decentralized organization, then it has more to do with the organizational design, that how you actually want to design your organization. Okay, all right. We have another question. Probably, this question you can try as homework. Yeah. Okay, Now we have to talk about the authority, responsibility, and accountability. Authority, responsibility, and accountability. So authority, okay, we have to figure out the difference between authority, responsibility, and accountability. Authority is the power that is given to you. Let's say you are working as the procurement manager in a company, and they say that you have the authority to to do the purchases till the amount of 10,000 pounds, euros, okay, whatever. So till 10,000, you have the authority. Okay? That's the power given to you. So the power given to the individuals in an organization to make decisions and command orders, this is the authority. Responsibility. Responsibility is the obligation to complete tasks or duties assigned to individuals. So authority is the power. Responsibility is more like, you know, your inner voice that how much do you think you should be like, what is your urge, what are your inner voice to complete a task or duties assigned to you. So that's responsibility. Accountability is when you're given an authority and you know you are responsible for your decisions, and at the end of the day you would be asked about the outcome. If the outcome is positive, you would be acknowledged. If the output is negative, you would have to give the answer. Okay, so this is what accountability is. So authority, accountability, and responsibility, all of these things are used in an organization as internal control mechanism. You know, okay, for example, the finance department, the finance head would be responsible, would have the authority to, you know, to probably make a big investment on behalf of the company, right? You know, the CFO would be given an authority that you can make a big investment on behalf of company. Okay, so that's authority. Uh, no one else has that authority, right? So this is how you're using the authority as a control mechanism. Like, you know, I gave you the example that sales staff was given the authority of till 10% discount. Okay, so this is the authority they are given. So that's the power. Above that, they don't have the authority. Okay, so that's how you're using authority as a control mechanism. Responsibility. So what you're doing, you are trying to make your staff more responsible by inculcating the culture of internal control, by training them, by providing them right guidance, by having the departments, you know, the concerned departments. So you are making them more responsible. So when your employees are responsible, they would be, you know, obviously a better control environment. Okay. Then we have the accountability. Obviously, you know, the sales manager would be given a budget, okay? And so now this is how much sales you have to make. At the end of the period, he would be asked questions if that budget is not met, okay? So accountability. So all of these three things we use as mechanisms of internal control system. Okay, what is the function of accounting? I mean, the accounting department, what are the things that accounting department is responsible for? So resource deployment, okay? Resource deployment means that organization has a certain level of resources. Like for example, organization has a certain investment, and organization want to deploy that investment in projects. So finance department or the accounting department would be evaluating different projects and deploying the resources, okay? And then, okay, so this is resource deployment. Then we have expressing objectives. Okay. Okay. Expressions, how accounting department is used for voice of the organization. So let's say the mission of the organization is to become fastest growing company in the country. Okay? So, but how would everyone know the what is fastest growing company in the country? So, finance department will work out, to read the competitors and run some numbers and say that okay, if we achieve 15% growth for next 5 years, we can be the fastest growing company of the country. Okay. So this is expressing objectives. Okay, so you want to be the largest company in the world, in the country. Okay, right now you have 20% market share. So finance department will work out the numbers and say that okay, if we have 35% market share, we would be the largest company in the country. Okay, so finance department, I was working as the financial analyst at a rating agency, and literally numbers of an organization talks to you. I mean, you calculate the ratios, and these ratios actually would start talking to you. They would tell you where there is a problem and which department they're doing good. For example, if they're having trouble with their current ratio or their quick ratio, you would quickly go to the cash flow statement and see that how their cash flow statement is going, right? How much cash they're generating from their operations. Because operations, the cash from operations is the most important thing. Okay, so and then you would analyze it and go further and see that okay, then you realize okay, I have to go back to the balance sheet and see that oh no, they have the slow moving inventory, right? All of their cash is stuck in inventory, right? So numbers are talking to you. Numbers are leading you from one point to another, right? So finance department can be the voice of the organization, expressing objectives. Then we have financial controls, right? We have the planning and controlling strategies for the detailed performance assessments. We make the budgets, right? We calculate the variances. We run the financial analysis, doing the ratio analysis and everything, right? So these are basically the financial controls. You give your production department that your material expense cannot exceed 5% of sales. Okay. You give target to your production department that your material expense cannot exceed 5% of the total sales of the company. Okay? This is the target you have given them. So these are the type of financial controls that you give in the organization, right? Okay. Okay. Then we have the components of financial component of accounting. We have financial accounting. Financial accounting is about making the statement of financial position, statement of profit and loss, cash flow statement, statement of changes in equity, and statement of other comprehensive income. So we are actually reporting to the stakeholders in financial accounting. Management accounting is more about doing the accounting to helping the management of the organization. You're doing the budgeting, you're calculating the prices, you are calculating the expenses, you are evaluating two projects. So these are all management accounting. Treasury management is more like managing the cash, like you're managing the working capital, you're managing the foreign currency, etc. And then internal audit, it is also part of the accounting function. So internal audit is part of internal control system of an organization because this is internal audit. So internal audit also comes under the accounting and finance function. Okay. All right. All right. Okay. So what I'm gonna do is I'm gonna send you guys these notes. Okay. We'll carry on from here. Okay. Let me send these notes in the chat. Let me send these notes in the chat, right? And then, there is a practice question that you guys have to do. I would recommend that you go through the notes, okay? And yeah, okay. And, we'll carry on from here tomorrow, same time. Okay, just give me a second. Let me just send you guys the notes. Okay, so if you guys have any questions, you can ask me the question on my WhatsApp or Facebook, and you can suggest how you want this course to be going. All right. Okay. Okay. Bye-bye. See you guys tomorrow. See ya. Thank you. Yes, come in.